4.5. State. Federal tax obligations. What tax forms will you need to file at the end of the year for yourself and your business? For starters, what state do you reside in? Are you required to pay income tax in your state? What type of business entity do you have? For the most part, you and your business should be filing the following tax forms, unless otherwise advised by your accountant. Personal tax obligation. State taxes, unless you live in a state that does not require you to pay state income tax, i.e., Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. Federal taxes, which most people pay via Form 1040. Business tax obligation. State taxes. Unless you reside in a state with no personal income tax, such as Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, or Wyoming, you are generally required to file a state tax return for your business earnings. It is a common misconception that simply forming an LLC in a tax-free state eliminates your tax bill. In reality, most states follow nexus rules, meaning they will still tax your income if you are physically performing the work within their borders. However, if both you and your business are legitimately established in one of these tax-friendly jurisdictions, you could potentially owe zero state income tax on your professional revenue every year. Federal taxes. No business is exempt from federal taxes, which remain a universal requirement across the United States. If you operate a multi-member LLC, your business is generally treated as a pass-through entity, meaning the LLC itself does not pay federal income tax. Instead, you file an informational return, IRS Form 1065, to report the company's total financial activity. When managed correctly, the business zeroes out because its net profit calculated by subtracting all ordinary and necessary business expenses from gross incomes passed directly to the owners. This individual share of profit is reported on a Schedule K-1, which transfers the tax responsibility from the business entity to you personally. Consequently, the business avoids an entity-level tax, leaving you as the individual responsible for reporting and paying taxes on those distributions.